Hey guys, welcome back to another video. In today's video, we are going to go over the subject of risk management, especially for the FTMO challenge, and how we can make sure that we categorically do not fail the challenge and the verification stage because we get our risk management wrong and violate the maximum daily loss. So I've started to do live streams where I backtest my FTMO strategy on GBP JPY every Tuesday, Thursday and Sunday. So join me from 8 PM to 10 PM GMT time where we backtest my FTMO strategy. If you're new around here, make sure to subscribe and give this video a like, and we can get straight into the video now. So as we can see, we are on the FTMO website, and what I wanted to turn your attention to is the 100k account. Now we're going to be using the 100k account for the challenge. We're going to have our risk parameters at normal, and I'm going to choose my currency as US dollar. Now as we can see, there are two steps to the challenge. If you are not familiar with the FTMO challenge, then just have a little research into this website, and that should be enough for you guys to get to grips with what the FTMO is, what they do, and what the challenge is. So what I want to bring your attention to mainly is this criteria here, the maximum daily loss. So the maximum daily loss is the maximum amount of money that they will allow you to lose in a day. Now if you violate this trading objective, then you will immediately lose the challenge and you will have to restart the challenge if you want to do it again, which means you're going to have to pay the fee. So the reason why I want to bring your attention to this is because a lot of people think it simply means you can't lose $5,000 in a day. Yes, that is true to an extent, but it also means something like this. As we can see on my screen, I have a trade that we have taken a loss on. So if we take this trade and we lose 1% on this trade, and we take into consideration we are trading a 100k account, then we would have lost 1%, which equates to 1,000 US dollars. Now that means that we have 4,000 US dollars left over that we can afford to lose for that day. Now if we take another trade and we go into drawdown on that trade of more than $4,000, so let's say we are in drawdown of minus $5,000, then we would have violated that trading criteria, because FTMO counts the amount of money that you have lost in that 24-hour period plus your maximum daily drawdown. So whatever your floating loss is, the maximum amount, that will be counted as well. So if, for example, we lose $1,000 in a trade and then we take another trade and we have a maximum floating loss of around $4,500, let's say, then we would have definitely violated that trading criteria and our challenge would be terminated immediately. So what I'd recommend you to do is click on this here and make sure you thoroughly read this and understand what they are asking and what the requirement is to make sure not to violate this trading objective, and so your trading challenge does not get cut short because you didn't understand what these requirements are. And that goes for the maximum loss as well, and the minimum trading days and the other requirements they have here at FTMO for the FTMO challenge. So since I've recorded my previous video, FTMO have actually come out with a new challenge, which is the $200,000 challenge, which really does look juicy as a challenge. The requirements are the same. A maximum daily loss is 5% of the account, and the profit target is 10% in the first step, and then the second step, its maximum daily loss stays at 5%, and the profit target is now 5% as well, which is a lot easier. And then obviously if you've passed these two steps, you get refunded the fee that you paid for the challenge, and you are on your way to getting a fully funded account with $200,000 in that account as its balance. Please let me know in the comment section below if you'd rather me do the $200,000 challenge or the $100,000 challenge. At the moment I am a bit in the middle. I'm not sure which one I should go for. Okay, so just before we get into the video where I go over my risk management techniques, I do want to say quickly that when I am trading, because I am a scalp trader, I do use magic keys, which is a risk management trading tool, and it's very helpful. It's really increased my risk management since I've traded, and I have seen positive results in the fact that my losers are smaller than what they used to be and my winners are at the same rate. So I tend to break even a lot quicker. So I would lose 1 or 2 trades and it'll only take me 1 trade to get back to break even and continue trading successfully for the week or for the month. When we come to the charts, for example, and we're ready to take a trade, we need to understand what our risk management strategy is and how we are going to start to scale out of our positions if price goes against us. So we can see that we have a trading opportunity that has presented itself to us on the 5th of March, which was on a Friday for the London session. So obviously we have a resistance around here somewhere, okay? A resistance actually, I'd say here, okay? And then we can say that this push up was a fake out, price retests, actually not a fake out, price pushes up, breaks the resistance, comes back, fakes the downside, comes back above, and then it's ready to continue moving up. So it's formed a high, it forms a higher high, forms a higher low, and then ready to push upwards to the upside. And we have clear targets for price over here, okay? So around there. Now what we can see is that the entry candle that you should have taken would have been this one, the 6 to 6:30 candle, okay? Because that gives us a good opportunity to get in at around the support level, and we would have taken the trade like so. Stops just below. We can see we have nice 10 pip stop, and price would have run into profits at 10 pips, and then we could have left a runner to continue up to our target of about 41 pips or so. Now, if you missed this entry, and I do know a lot of you would have entered at this candle here. So let's see how price reacts. Now, I can tell you this beforehand. I know this is a losing trade, but let's say you took this trade, you saw the stop loss was big, but obviously you're risking 1%, so that's fine. And you're looking to make about 1% here. So this is what your trade looks like. Now, if I break it down to the 15-minute time frame, this is what it looks like. So I can show you how price goes against us and how we are going to manage our risk to make sure we lose less money as possible. Okay, so we enter the trade and then the next candle does this. Okay, so price has gone against us. Now when price goes 50% into your drawdown, so when you're in drawdown 50% of your total stop loss size, you have to close 50% of your trade. Just close 50% of your position. Now if you're in a position size of 1 lot, you want to close 0.5 lots of that trade. Why? So the reason is very simple. If price has gone down 5 pips into drawdown, for example, for a 10 pip stop loss, or in this case 10 pips for about a 20 pip stop loss, let's make that 20 pips so it looks better, then price has a higher probability of continuing to the downside. Okay, so it's a higher probability for price to come and hit your stop loss. So what you want to do is you want to minimize the amount of money you're going to lose. So at this point here, we can mark it out with a red line. So as price is coming down, let's say, let's just do that. What's that? 10 pips. So where's 10 pips? There. You are going to close 50% of your trade. Oh wow, okay. Let's move that, and then it's about here somewhere. You're going to close 50% of your trade. Now, as we can see from this trade, the trade pushes back upwards, right? But it closes bearish. Now we have a bearish close. Now, if you were to take a trade now let's say you weren't in the trade and you come to the charts and you see this on the 15-minute time frame, okay? Would you still take the trade? No, because now price doesn't look so confident. You're not so confident to take the trade, and you don't feel confident in how price looks here. So you wouldn't even take the trade. So at this point, you have a very good chance to close the trade at a small loss. And if you do so, it's a very good decision. Now, let's see what happens for the next 15 minutes. Now price comes and hits your stop loss. Now, if this happens, that's fine. But this is what I would look to do if you didn't close up your trade around here. For example, I would look to close my entire position that is left running, which should be about 0.5 lots for a 1 lot trade. You want to close your position as price breaks the low of this candle, because there's a higher probability that price is going to continue downwards now. we can see price, this candle respects the high of the previous candle but breaks the low of the previous candle, which means price looks to push to the downside. And so when it comes to your risk management, you would close your entire position at this point there, and we can see that we would have took our 1% loss that we were willing to lose at the beginning of the trade, and we've chopped that down, and I think around this point we would lose, okay, I'm not sure, but I will calculate it after I record this video and I'll put that up on the screen just so you can see how much we would have actually lost in terms of a figure for a standard one lot trade, and what percentage that should work out to for your account if you're risking 1%. So if you're thinking of attempting the FTMO challenge like I am, then I really do believe that risk management and trade management, which actually I think what we just went over comes under trade management more than risk management, but that is very, very important because it means that you are cutting your losses down to smaller losses and you are making sure that your winners are big in comparison to your losers, which are small. I've been in and around the trading space for quite a while now. I'd say about 5 years, but I haven't been trading consistently. Don't get that confused as in I've been a successful trader for 5 years. I haven't. I was introduced when I was about 16. I'm 23 now, so it's been a bit of a rocky ride. But a lot of people talk about you set your stop loss, you set your take profit, you get in at your entry price, and you just let the price run. But the biggest problem with that is you're not managing your trade. There's no trade management happening. And when you're not managing your trade, price action may print candles that are going to make your trade invalid, and you're still going to let your trade go and hit your 1% stop loss. I feel as if that's not a good thing to do, and if price is really going to go in the direction of your trade, then it shouldn't print candles or candle structure that goes against your trade in the first place. And so trade management comes in very, very handy at this point, and you need to be able to make sure that you manage your trade and lose less money and less percentage of your account as possible, because it means you're becoming a better trader. So just as a recap of my risk management and trade management, make sure you're risking 1% of your account size in terms of the position you enter and the maximum amount of money you can lose from the trade you have entered. If you have entered a trade and you are in deep drawdown, so let's say if you've entered a trade where your stop loss is 10 pips and you are in 50% drawdown, then close 50% of your trade and see what type of candle structure you get, candle closes you get, and validate whether your trade is still valid or not. And if it's not, then close your trade, and if it is, then let's see what price prints in the end. And finally, the main point I want you to take away from this video is if price hits your stop loss, then that should be considered as a bad trade. But if you manage your risk well and you manage your trade very well, and price does not hit your stop loss and you still take a small or maybe 0.5% loss, then I think that should be counted as a good trade because it showed your ability to manage your risk and get the best out of the trade that you possibly can. Okay, so that's it for today's video. Thanks for watching. Make sure to subscribe, smash that like button, and I'll see you in the next video.